Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 28th, and we got a bit of economic news releases. This week, we got a lot of the housing numbers coming up. So today, we'll start off with the Case-Shiller Home Price Index for July's numbers. So if we look at June, we had a nice rise of 2.3% increase in the home prices, according to the Case-Shiller. And in July, it kind of got bumped up to 1.6. So a nice little change there. The Case-Shiller has a 20 city index, and it goes over a 3-month period as a weighted average. That's kind of how they develop their home prices. So it's 20 of the major cities in the U.S. here. Then we have the consumer confidence for September, and we had a 60.6 gauge on there, and we figured it's going to jump up for September in 65, and it jumped up to 70.3. So that's actually really good. Good to see the people are feeling a lot better about where things are at and stuff. So that's obviously a very good sign. Then we also had the, on the other hand, from the Case-Shiller, we got the FHFA home price index for July as well. Now this one is basically a gauge that does a 1-month index, so it's not as on a weighted average as the Case-Shiller is. So it'll look a little bit different. But June they had a 0.6% increase, and July was like 0.2. So still an increase, but not as much as obviously the month prior to. So that's one way you can look at it. So kind of in line with the Case-Shiller. Now, if we go over to the headline news, we see the stock market's up. A lot of it has to do with right here the U.S. dollar going down a little bit. Why does that anticipate things? Is that the equity or the commodities markets like it, the price of oil goes down a little bit, so more people could afford it. We could expand our trade into other countries because our cost of goods is a little bit less expensive. So that's kind of why the stock market's riding a little bit in this scenario here. And also, there's a little report that a speech came out by the Fed's Williams that I guess he was speaking to an audience and mentioned that if QE3, while they're in QE3 and it doesn't over, he didn't really specify a period, but if it goes over to a certain, they get kind of tired and doesn't see really any results from it, they could expand that to include other different tools that they can to try to create more jobs. Their biggest goal objective of QE3 was to try to create jobs. We need to try decrease that from 9% unemployment. So that's their main goal, is to try improve jobs. Let's go ahead and take a look here at the bond market, see what the interest rates are doing today. And as you can see, we're still having that nice trend line going upwards. We're still seeing some improvement. We ended up closing the day out yesterday at 105.41, and currently we're at 105.47. As I mentioned, we haven't reached the 105 level before in the 3% coupon. So these are kind of uncharted territories. We are very good stage here. Rates are exceptionally low right now. So this could be a very good time to either refinance or buy. And I wouldn't play around with it too much, because for how long this may not last for too long. So I would jump to it as soon as possible. All right, folks, you guys have a wonderful day. Thanks for stopping by and watching. If you guys like to have these emailed to you on a daily basis, to stop by mikesdailymarketreport.com. There's no spam, no other emails coming to you, just these. You're not on any other list but these. Okay, so it'll be mikesdailymarketreport.com. Upper right hand, you'll see a feed burner. Just put in your email address, and you'll be on a list that automatically goes out every time I upload. All right, have a great day. See you tomorrow.